Hi there, this is Alvin from Dr. Wealth. The US big tech have just announced their results this week, so I'm going to bring you through the good and the bad and see where we can analyze from here. And to this year, the big tech performance have not been good. If we take a look at this image here, Apple has down 20%, but it's the best of the lot. We see Microsoft, Alphabet, Amazon down even more than 30%. And the worst of all is, of course, Meta is down 71% year to date. So it isn't pretty, these results, and I fear that there are more downside to go for this US big tech because their recent results are generally not as rosy as what we would expect it to be. So let's run through some of these companies, and let's start with Amazon, right? So the year-on-year growth has recovered to double digit to 15% in the latest quarter. It came off from the past 2 quarters of a 7% growth, right? So you can see that the good number one is that the revenue growth has recovered somehow. Of course, we cannot compare to say the early stage of 2021 or during 2020, where the Amazon and other big techs were enjoying the benefits of a lockdown or basically restricted activities. And these tech companies were able to continue to deliver goods, deliver stuff to their house, to keep them entertained, to keep them connected in the world, despite that they are at home. So now times have changed, right? Because now after COVID, people have started going out and they found that they no longer need as much online shopping as they did before. Okay, so it is still commendable that they managed to grow that 15% in the latest quarter. The second good is that Amazon advertising revenue has been growing rapidly, and even the latest quarter it went up 25%. And its revenue of 9.5 billion currently is more than YouTube's revenue of 7 billion. So despite Amazon started late in this game, advertising game, it caught up pretty fast, right? Of course, it is not at the scale of even Meta's revenue or Google search revenue, but at least it surpassed a significant YouTube revenue in this case, right? And YouTube, moreover, saw a decline of 2%, and yet Amazon was able to grow and supersede YouTube at this point in time. So this is also another commendable thing that Amazon has achieved. And now let's look at the bad number one. Free cash flow, as you can see, has been negative for the past 3 quarters, including the latest quarter. So that makes it the trailing 12 months of negative free cash flow. This is a key metric that Amazon actually watch out for, right? And their long-term goal is to bring it back to the positive region, right? So compared to a year ago, which was positive in that quarter, and the latest Q3 is a negative number, okay? And bad number two is that their operating income has been declining as well, right? So it's slash half. So there may be some inflationary impact to their cost control. Okay, so this is something to watch out for as well. And this is the bad number three. The guidance for Amazon in the next quarter has shown that it's likely to go back to the single digit growth once more, okay, between 2 to 8% growth. And this is very uniform with the rest of the big tech, which I will share with you later. Okay, so there are three bets. And the overall key issues, right? Negative free cash flow, lowering operating income, slower growth, all these are linked to slower demand, okay, as well as they overexpanded during the pandemic. As I mentioned just now, a lot of the demand were found or were fast forwarded, okay, many years from the future to during the COVID period. The adoption rate for e-commerce went up. They bought more things during the pandemic because they need them to be delivered to the house, right? So Amazon expanded very fast to fulfill their demand during those years. But now with the demand slowing down, they realized that, oh, we have so much capacity, the warehouse are empty, and they started to close them and to curtail the cost, right? To control the cost. Okay, because if you don't have that demand and yet you keep all these warehouses running and your workers are idling, then you're paying the cost for nothing. Okay, so that is why their free cash flow is negative. Okay, so they are going to scale back some of this investment that they have done during the pandemic period. So it will take some time, okay, for this issue to be resolved. And let's move on to the next company, next big tech, and we're going to talk about Meta, right, the worst of the lot. And if we look at their 3Q 2022 advertising revenue, okay, is at 27 billion. But the more concerning thing is that the growth has gone down, right? So which means the revenue has shrunk. Sorry, it's not growth go down. The revenue has shrunk. So revenue has declined 4%. And this is the second consecutive quarter that this negative growth has happened, okay, or this shrinkage have happened. And if we compare to, say, Google advertising, okay, just the advertising space, which includes YouTube, it managed to grow 3%. Yes, YouTube shrunk, right? But the Google search revenue actually went up. So in comparison, right, Google is in a better shape, and yet advertising revenue for Google is double that of Meta. Okay, it always have been bigger. Okay, but by right, when it's bigger, you expect it to grow slower, but yet it beat Meta in this case. Okay, so this is something that is bad for Meta. It might be really the iOS issues, right? The security choice option for users, and it makes that ad tracking a lot less useful or effective for advertisers. So advertisers stop advertising or reduce their advertising budget, as well as the overall macroeconomic slowdown. There were reports that say that advertising budget have generally shrunk as well. So you have all these confluence of factors that probably hit Meta a lot more compared to Google. Okay, and another bad news about Meta is that it has the investment in metaverse. Okay, as we have know that, and that is captured under the Reality Labs. That's where the VR goggles, the AR stuff, the developments are done. Okay, so if we take a look, their revenue has always averaged about $591 million. Okay, so they do rake in some revenue. It's not totally zero revenue, but in the latest quarter, it has shrunk to 287 million, the lowest in the past quarters, okay, ever. Right, so that shows also a very significant slowdown in the demand for these VR headsets, etc. And yet the operating losses ballooned from average of 2.6 billion to 3.7 billion. So you can see they are really burning billions and billions of dollars every quarter. So this is what the investors really didn't like, and many are dumping this Meta stock because they don't believe in the vision. They don't believe that this metaverse is going to be a good direction to move into. But Zuckerberg said that we are going ahead no matter what, and we're going to burn more money next year. This is totally like a nightmare for investors to hear, and that probably really prompt more investors to sell down. That's why Meta's share price have performed so badly. It's down 70% since the start of the year. Okay, so that's what's going on Meta, unless it changes direction. Otherwise, the lack of demand support for the share price will continue. Okay, next we will have Alphabet, and the good thing is that the advertising managed to grow. They managed to grow in totality 3% for the advertising space. And yes, Google saw a dip of 2%, Google Network saw a dip of 2%, but the Google search was strong, right, at another 4% growth from a year ago, and that's a good thing, right? But the bad thing is that advertising is slowing. Okay, so Google is also affected, right? Or Alphabet is also affected. Okay, just less so than Meta because it doesn't have the iOS issue. Because even if you're on iOS, likely you're using Google search. So one way or another, Google's still able to make their ads more effective, right? So Meta was hurt more in that sense. Okay, but this general advertising slowdown is a common misery for all. Okay, some more than the others, right? Because for Amazon, there wasn't such a trouble. There wasn't such a problem. And even for Pinterest, there wasn't such a problem at all. Okay. And this is Google Cloud, which is an up-and-coming business segment for Google. They are investing a lot of money in this area, right? And we can see that the growth is still continuing, 38% growth from a year ago in the latest quarter. Okay, so that's healthy. You do want to see that momentum, right? And capture more market share as the investment get poured in, right? There is some return. But that said, you can see the operating losses have increased as well by 9%. Okay, so the loss has widened, and which means that it seems like Google will take even more time to recoup the money. Okay, and it might be a case where Google may slow down their investment into the cloud space. Right, it remains to be seen. Okay, because the CEO did say that it is time that we control the cost better. Okay, it's not going to be an easy ride. Growth is not going to come so easy. We have to tailor our costs in accordance to what the demand is going to be. Okay, so it remains to be seen how this cloud will grow in the next few quarters. Next up, we have Microsoft, and Microsoft, the very first bad thing is that the revenue growth continued to slow. As you can see, that this diagram, it went all the way up, healthy growth during the pandemic period. As I mentioned, big tech has really enjoyed the benefits of the lockdown and restricted movement. Then after that, once it opened up, plus all the interest rate increment and all the talks about economic slowdown, it started to show in Microsoft revenue growth as well, right? So it slowed down to about 11%. Okay, still respectable, still commendable, right? Still a double-digit growth for this size of the company. Okay, so it's something that we should take into consideration. consideration. And the bad thing is that the guidance for next quarter is slowing even further. So that momentum or that trend of slowing growth has continued. And they are only expect about 2% in the next quarter. Okay, so this is something that is common to all the big tech stocks so far, right? The guidance have tend to be more negative than positive. And last but not least, we have Apple. And let me blow this up for you. Okay, so for Apple, generally, I would say that Apple has performed the best among all the big tech. They are pretty unscathed from the latest results. Okay, even investors were not like frantically dumping the stock as with the rest of the companies, which later I will show you, okay, what is their post-result performance. And the good thing is that Apple iPhone is still selling very well. It saw a 10% growth from last year, okay, and despite that, the overall demand for smartphones have decreased this year, okay, yet Apple was able to grow 10%. So that was very encouraging, and iPhone is the largest segment in Apple's revenue. Okay, and if you take a look across all their business segments, whether it's MacBook, Apple Watch, AirPods, services, they all have healthy gains, okay, except for iPad. But iPad is also the smallest business segment, the smallest contributor to Apple's revenue. So even if it slow down, it's fine, right? So overall, I would say that Apple results are pretty robust. And if you take a look at the margins, are quite maintained quite well, right? Just minus 1 or 2 percentage point from a year ago, right? Because we have to cater for some inflation. But generally, the inflation is not an issue for them, okay? That said, they do have a headwind, which was Forex. Right, the Forex impact, because Apple has businesses all over the world, and with the strengthening USD, a lot of the foreign currency, when converted back to the USD reporting currency, they will see some Forex losses. Okay, so the management was saying that if not for these Forex losses, they could have been enjoying a double-digit gain in terms of their revenue growth. Okay, but this year or this quarter, they managed to grow their overall revenue by 8%. Okay, so for the biggest company in the world by market cap, and they're still able to grow their revenue during such a tough time, again, this is something that's very commendable. Okay, so the bad thing is that the guidance for next quarter, likewise, they are going to expect a slowdown or slower growth. They didn't give an exact number, but they say that, okay, we'll give you roughly where the direction is, whether is it more than current growth rate or lower than current growth rate. So the thing is that it's going to be lower than current growth rate of 8%. Okay, so there's a general slowdown, right? That's going to happen in this quarter. So it seems like economy is haven't really bottom out in terms of the worst times, right? But sometimes the stock market may not time exactly at the bottom of the economy. Okay, so share price, for all you know, can recover before the fundamentals get better. Okay, so that's something to take note as well. So in summary, I would say that Apple is the only one that is really the untouchable, is worthy of its name as the biggest company in the world by market cap. It's still at $2.3 trillion in terms of market cap. And you can see Amazon and Meta are rather disappointing, right? They are below 1 trillion already. Especially Meta is like a quarter of a trillion. So it has really dropped a lot, and it's going to be a very tough time for Meta, right? Among all the big tech, they are probably the weakest now. Apple is still the strongest. And if you look at the revenue growth in the latest quarter across the board, you start to see that again, Meta is the one that is the only big tech that saw a revenue decline. The rest had gains. Okay, and the guidance, likewise, Meta also expect further losses, further slowdown in their revenue growth. Okay, not losses, they're still profitable. But you look at other big tech, they are generally on a positive growth again. Okay, just slower, right? But still positive. And the share price after the earnings release, I was taking the after hours trading period. Okay, so you can see that only Apple was flat. The rest had a very significant reaction from the investors. Okay, especially Meta was down 20%. Amazon was not spared too, was down 13%, and Microsoft and Alphabet were down 7% after the results were released. Right? And year to date, we saw just now. Okay, so that's just a table for you to look at it easily, right? So I hope this video have given you a good sense where the big tech is and the general trend of where we are going in the next quarter, right? So some good, some bad, but generally more bad than good, right? So with that, I hope you like this video. Give me a thumbs up, subscribe to this channel, and I'll see you around. Goodbye.